This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index is soaring about 5.5% over the past 24 hours at $65,741, retesting that all-time high. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So let's take a look at some of our top stories moving markets. Crypto mining stocks surging today as the price of Bitcoin approaches record highs and Ether hits an all-time high. Crypto miner Marathon Digital leading the surge with the stock soaring almost 20%, while Riot Blockchain climbs just over 17%. The share price of miners are most leveraged to the price of cryptocurrency since their main source of revenue comes from the mining of coins and holding them on their balance sheets. Meanwhile, Singapore-based crypto mining company Atlas Mining partnering with Luxor Technology to provide mining pool services, helping expand Atlas's operations in North America following China's sweeping crypto ban. Atlas saying the U.S. and Canada have become a hotspot for relocation amid China's mining crackdown, with the U.S. now accounting for a third of the global Bitcoin mining hash rate, according to a Cambridge University study. Finally, banks will most likely try to capitalize on the demand for stablecoin deposits on the back of the crypto market's exponential growth, according to Morgan Stanley's lead crypto strategist. Separately, former Citigroup CEO Vikram Pandit saying in the coming years, quote, every large bank and or securities firm is going to consider enabling crypto trading.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin's illiquid supply is at an all-time high, with BTC holders keeping over 14.5 million Bitcoins close to the vest. Crypto exchange OKX's research arm saying on-chain data shows bullish signs for Bitcoin in the medium term. Miners have accumulated over 3,000 BTC in their wallets since September. The network's hash rate or computing power has been steadily increasing since July, and the mining difficulty has also increased 8 times. Bitcoin ending an almost 3-week-long sideways turn and looking to retest the all-time high price of just nearly $66,900. The cryptocurrency market is also worth more than ever, with over $3 trillion in total market capitalization. ETH is particularly on a record-breaking tear, soaring to an all-time high of $4,794. Bitcoin dominance over the crypto market hovering around 40% compared to 70% at the beginning of the year. The new highs come as real or inflation-adjusted bond yields continue to slide, contradicting Federal Reserve Chairman Jerome Powell's long-held view that high inflation is due to transitory factors. U.S. Treasury Department data showing the 10-year real yield dipping to around -1% Friday, lowest since August 30th. Joining us now to discuss Bitcoin and more is Thomas Chifas, CEO of Chicago-based crypto exchange RSX. Hello there, Thomas. So there's a lot going on at the start of the week. BTC holders are hodling, Bitcoin nearing an all-time high, ETH already hitting that all-time high mode. What's your outlook on Bitcoin?
Yeah, there's a lot to cheer about. Very positive, of course. I think you not only the positive trends you're describing with the growth of mining and what have you early on in the show here, but if you look over the last few weeks, we had this great sort of 3-week-long consolidation where certainly the selling pressure seemed to subside and allow for the upside to be broken, and now we're testing new highs, as you mentioned at the open. So I think there's a lot of good stuff happening. There are a lot of call options with open interest that expired this past Friday. Shorts may have kept some of the market down during the week, but had to buy back the deltas. And I think there's a lot of other new things in the market that are going to drive some new dynamics that we have to be mindful of and watch. There's the new inflows in ETFs. We don't have the data yet to support that, but we can see the transaction volume in the ETF every day. And now we have this increasing futures volume, some of which doesn't trade on the weekends if it's U.S.-based futures. And there's always some gaps to fill on Monday morning with respect to get the price back in line with spot. So lots to drive activity over the last week.
The crypto market's cap is also passing $3 trillion. Bitcoin dominance is at about 40%. Will we ever see Bitcoin dominance back at 70% like at the beginning of the year, or even 50%?
I think in crypto, you have to say all things are possible, but certainly there's a lot of incredible activity going on around ETH, as we've seen. New levels being tested there as well. Getting to 50, sure, 70, maybe. There's just so much happening in the space today, but we're on the cusp of this growth in hash rate capacity. We are on the cusp of all these entities now finally, after many years of talking about it, embracing Bitcoin, and we're pretty close to a substantial number of new features coming out in Bitcoin once Taproot is enabled, and I think we're going to see a whole new slew of use cases come out that certainly could drive dominance back up again for Bitcoin.
Speaking of growth and acquisitions, so Cboe Global Markets is acquiring ErisX, but it's not a done deal yet, is it?
We've signed, but we have to go through a regulatory approval process. So ErisX operates both a derivatives exchange and clearinghouse, which is regulated by the CFTC, and then we're a spot market operator in the U.S. as well too. So we have to go and speak with the regulators on all the state levels as well too. So we're making good headway. We signed that transaction a few weeks ago, and it's really just contingent upon the regulatory approval. We're making very good headway. I'd hope we can get this wrapped up in the next 4 to 6 months.
What makes ErisX a good fit with Cboe?
Well, Cboe is a global operator of markets across asset classes. I think there are 21 markets currently, equities, options, futures, FX. They're in clearing now in Europe. So they're a global exchange operator, always been very innovative. And I think as a supportive investor, and they have been an investor since day one with ErisX, they've seen all the work that our team has done and our very focused vision on building out the appropriate regulatory, technical, and operational infrastructure that you need to operate a properly regulated exchange, both for spot and derivatives here in the U.S. And I think if you look at the public statements that were made, the stars are aligning. The market wants what we have. They have the ability to support it, and the time is right.
Thomas, Cboe had Bitcoin futures products in 2017. Do they regret shuttering that program down?
I don't think so. Ed Tilley, the CEO, has spoken about this publicly. No regrets. They were early. You got to learn. You have to try new things. And the fact that they invested in us at that time and have now moved forward with this transaction, I think shows that you can look backwards if you like, but the best view is always out ahead.
Finally, any price prediction for the end of the year for Bitcoin?
Oh, man. I think we're going to definitely get over 70. I don't know if we're going to get 100. I know a lot of people are saying that, but, I'd love to see, mid to high 70s would be great, but maybe I'm being overly conservative.
All right, Thomas, thanks for joining us. Appreciate it, and congratulations on the merger. That was ErisX CEO Thomas Chivas. Coming up, will Bitcoin miners have to become brokers? We'll discuss the consequences of the recently passed U.S. infrastructure bill.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
As the company that launched the world's first ever Bitcoin ETF, we at Purpose chose the CoinDesk Bitcoin Price Index, the XBX, to price our assets.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. The U.S. House of Representatives voted Friday to pass a $1.2 trillion bipartisan infrastructure bill that contains a controversial cryptocurrency tax reporting requirement. That requirement expands the definition of broker to potentially encompass miners and other crypto-specific entities that don't actually facilitate transactions, and ignited a fierce backlash among the crypto community. The bill now goes to U.S. President Joe Biden for his signature. Joining us now to discuss is Kristen Smith, Executive Director of Crypto Trade Group, the Blockchain Association. Hello there, Kristen. So what are the consequences of this bill for miners?
Well, it's hard to know exactly what the consequences of this bill are going to be because the next phase after the president signs the infrastructure legislation into law is for the IRS to proceed with a rulemaking process to put some details around how this provision is going to be implemented. The IRS does have some flexibility in how they define broker. The good news is that there was a tremendous outpouring of comments into the House and Senate throughout the past couple of months, particularly in August, around the time that the Wyden Amendment was in consideration on the Senate floor. And I think that Congress understands that they do not want validators, whether they be miners or stakers or some other form of validator, to be taxed under this provision. I think the same spirit applies to software developers. And so I do think that there's going to continue to be congressional pressure on the IRS to make sure that the definition of broker is as narrowly tailored as possible. And there may also be, we might see legislation introduced this week as well that would try to fix this. Now, I don't think that legislation is going to get legs right out of the gate, but there may be an opportunity to actually fix the underlying definition before the regulation goes into effect.
Oh, I'm not familiar with this legislation. Do you have further details on who's bringing this up and what the chances are?
Yeah, well, we've heard from multiple offices on Capitol Hill, both in the House and the Senate, both Republicans and Democrats, that really want to solve this issue. And, you know, there's really two ways to solve it. One is to get a very narrowly enacted version of the provision done at the regulatory level, or the other way is to get new legislation to undo the negative provisions in the bad legislation. So I don't want to jump ahead of any news, but I do know there are multiple offices that are looking at this, and I do expect to see some activity out of Congress this week and in the weeks ahead.
You mentioned pressure. We hear this statement from the Crypto Council for Innovation saying that we are deeply concerned with the passage of problematic language on cryptocurrency in the infrastructure bill. Our concerns are twofold. First, the broker definition may include those without a customer, like miners and developers. Second, the reporting requirements create an undue financial surveillance, which may compel companies to report on individuals who may not even be customers. So indeed, we do see members of the crypto community ratcheting up that pressure there. But is there anything that came out of this bill that was good for the crypto industry?
Absolutely. I think prior to this, most members of Congress, not the ones that are active in our space every day, but most members of Congress in the House and the Senate didn't realize that there are everyday constituents that they represent who are passionate about crypto. So even though we lost the ability to change this provision, we won in that Congress is now aware that there's an entire ecosystem that wants to see good crypto policy. I would say another benefit has been for crypto companies in this space. They have realized, if they hadn't realized already, the importance of constructively engaging in Washington. And I mean, I can say at the Blockchain Association, our membership has grown dramatically since August. We've had more resources come in. We have individual companies in the ecosystem that are building out their own teams on the ground in Washington. So prior to this, we had a very small number of players that were on the battlefield here in Washington. Now we have a whole army and it's growing. And I think in the next sort of 3 to 6 months, we'll actually be at a place where we can stop just being reactive whenever something bad comes up, but pivot and actually start to pursue kind of proactive policies that will bring regulatory clarity and certainty to the industry.
Great. Are there other provisions to be concerned about within this infrastructure bill?
Yeah, I mean, in addition to the broker definition, there's also this section 6050I, which would, aims to bring parity with cash. Because like today, if you go and buy a Tesla and you pay cash, the Tesla dealer is obligated to file a report, get your social security number, and submit that information to the IRS. This legislation would similarly do that for crypto. And so if you go buy, your Tesla with Bitcoin, you would have to do that same type of, the Tesla would have to do that same type of reporting. Where it gets complicated is that, as you well know, we don't just transact on a sort of a commercial basis with one another in the crypto world. When you add in smart contracts and some of those capabilities, you might be in a position where all of the sudden a protocol, or maybe perhaps again a miner or some other participant in the ecosystem, would be on the hook for that reporting. And it's that type of disconnect that we need to make sure doesn't get enacted as the policy moves forward. So yeah, lots of work to do still, but the good news is there will be an open process for determining the regulations, and Congress can come in and act to undo this. And so we're going to be sort of at the Blockchain Association working down both of those paths in the weeks and months ahead.
Finally, just one last question. The President's Working Group came out with a report on stablecoins. They're recommending that stablecoin issuers be treated like banks. Reading on this report, what did it get right and what did it get wrong in your assessment?
Yeah, well, listen, I think that what we were encouraged by is the President's Working Group didn't conclude that all stablecoins are securities and should be regulated under securities laws. They did reference the SEC briefly in there. The one thing I do think they get right is that there should be an option, for stablecoins to be regulated within the banking system. I don't think we want to make it a requirement that in order to issue a stablecoin, you have to be a bank. But there are companies out there and there are issuers out there that want to have the comfort and structure of the banking system. And so I think if there's anything positive that's come out of this is that it has spurred a dialogue, a much more constructive dialogue, by the way, than we were having when all of this was just merely a reaction to what Facebook was trying to do a couple of years ago. But a dialogue about, hey, what are stablecoins, particularly the reserve-backed stablecoins, and what is the best way to provide confidence that users the users want to know that they will be able to get $1 back whenever they need to do so. So I think that we'll have a very constructive dialogue going forward, but this is only a step in the process. It's certainly not the first step and certainly not the last.
An ongoing story. Well, thank you so much, Kristen, a voice for the crypto industry in DC. Thank you for your time. That was Blockchain Association Executive Director Kristen Smith. All right, that's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again tomorrow at 3 p.m. Eastern Standard Time. Join us tomorrow morning at 9 a.m. in New York for First Mover. You're watching CoinDesk TV.